The Australian share market plunged to its lowest level in more than 2 years today as concerns the global economic recovery is faltering heightened, setting off a worldwide equities rout. Markets in Europe and America fell sharply, with Wall Street completing its worst 9-day slump since 2009. So is the world lurching into another recession? Greg Hoy reports.
Worrying US economic data amidst government spending cuts and simmering sovereign debt concerns overshadowing Italy and Spain fueled fears the global economy may be sliding back into a quagmire.
And I think investors in general are just very worried that we're headed for a recession and they want to get out while the getting's good.
The no-confidence contagion soon swept through Asian markets before hitting the Australian dollar and share market, which slumped 4% on early trade as anxious investors felt it prudent to panic and sell. Economists thought this was an overreaction.
In terms of a global recession, I think the chances are very, very small, probably less than 5%. You might have a recession in Europe or maybe in the US, but even there I think the chances are more like 10 to 15%.
There's actually been a whole range of better economic data across the world in the last 6 weeks than the outright negative reaction we're seeing in markets would suggest. We've seen good data in China. We've seen a really strong uplift in Japanese industrial production that suggests some of the supply chain issues that have actually caused this weaker data or contributed to this weaker data in the US and Europe over the last few months, that is coming to an end.
But sadly, the rollercoaster ride for millions of Australian superannuation investors continues, just as many were regaining much of the ground lost since the onset of the global financial crisis in late 2007.
Well, up until the end of June, the super fund returns were looking exceptional. We've had 2 positive years. 2 years ago it was 10%, and last financial year we did just a tad under 9%. So, you know, we recovered about 19% in the last 2 years from the depths of the GFC, which goes way back to 2007. So right up to that point, everything looking rosy. Then suddenly July, a negative month, and then the market's obviously been smashed in early August, and that's flowed straight through into super funds to see a reduction in super fund earnings in the last 5 weeks of around about 4%.
Of course, one of the greatest fears remaining is fear itself. Few local economists would be brazen enough to suggest recession is not possible, but most maintain it's not probable. And though reducing its growth projections, in a statement released today, the Reserve Bank seems to agree.
They're not worried about the globe. The risks are higher, but their core forecast is basically somewhere around about 4% growth. For Australia, they basically think the economy is going to come back very strongly, something like 3.25% over the rest of the year.
We're more inclined to think that this is just going to be quite a soft patch in global growth that we'll come out of over the next few months, rather than at the beginning of a precipitous slide into a recession.
But the bad news just seems to keep on coming, and there's still considerable trepidation about the latest US employment data due out this evening, with opinion divided as to whether this is likely to further spook or soothe global investors. If economists will be watching that closely, so will Australian superannuation analysts, who are hoping some more encouraging data might mean superannuation investment returns resume their path to full recovery.
And basically, we're about 6 to 7% short of where we were in November 2007. And, you know, don't forget, we had a 1 year in the super fund returns of minus 12.7. So that was a significant drop. And the prior year was also negative. So the 2 positive years since then, we almost got back to parity, but have dropped down since, particularly due to July and August of this year.
In the end, however, relative to the US and Euro doldrums, Australia remains very much the lucky country. And of the analysts we spoke to at least, all are cautiously confident that luck will hold.
I think anyone that puts out a forecast there for markets going forward is very game indeed.
Or I think, it's very difficult to say this, I would basically hold your nerve, because what the market is now pricing in terms of the equity market and the interest rates market, is essentially a global recession. And whilst there's a very, very small chance that that's right, I think most people think that is not right. And the central bank doesn't believe it, we don't believe it, and I think most economists don't believe it.